I put $10,000 into 5 different dividend ETFs to see what would happen. Not theory, but actual cash in the market. I split the money evenly, $2,000 into each ETF for variety. No loading up on just high-yield funds. I picked a mix, one high yield, one focusing on growth, another on dividend aristocrats, one on boring sectors, and one international ETF. I expected high yield to give big cash but lag on price, the growth ETF to have modest income with stronger appreciation. I thought the aristocrats would be slow and steady, while the defensive one would be boring in a good way, and the international ETF was just for diversification. The first couple of months rolled by without much drama. Dividends trickled in, small payments landing in my account. Each one gave me that funny little dopamine rush. A dividend feels tangible, like actual cash you can hold or spend. By the end of the first quarter, I had collected around $90 across all 5 funds. It felt like proof that the system worked. But then things started to diverge. The growth-focused ETF was doing way better than expected, up nearly 8%. Meanwhile, the high-yield fund was handing me fatter checks, closer to 5 or 6%, but its share price was sliding. The Aristocrats fund behaved just as expected. It didn't make me rich, but it didn't give me a heart attack either. Dividends were stable. Price moved upward, but not dramatically, keeping my portfolio balanced like the designated driver. The defensive sectors ETF was similar, a bit sluggish, but during market dips, it proved its value, barely budging. The international fund was the wild card, doing okay until currency shifts impacted returns. By year-end, I collected $350 to $450 in dividends. On a $10,000 investment, that's a solid yield. The growth-oriented ETF was up nearly 10%, whereas the high-yield one barely crawled forward with losses. The total portfolio return was around 5 to 7%, depending on how you treat the dividends. If reinvested, compounding effects nudged it higher. Taking cash felt nice, but slowed growth. Dividends have a sneaky psychological effect. They make you feel wealthier than you are. A 5% yield looks nice, but if it never increases, inflation eats it alive. Watching the growth ETF outperform the high-yield one made me appreciate dividend increases. Diversification isn't just about having 5 different ETFs, it's what's inside them. The defensive ETF cushioned blows, while the high-yield one taught me not to assume fat checks equal smart investments. Taxes and fees were the unglamorous side of investing. Dividends faced cuts before I could enjoy them due to Uncle Sam's share. I didn't expect much emotion from supposed boring ETFs, yet the volatility made me question my strategies repeatedly. Should I sell the loser? Double down on the winner? Ultimately, staying patient proved fruitful. Looking back, would I invest the same way again? Dropping $10,000 across 5 ETFs seemed balanced, but revealed cracks. Chasing yield brought a bittersweet experience. High dividend checks felt good, but the dipping share price was concerning. Next time, I'd want exposure to high yields, but less than before. Maybe 1,000 instead of 2. When I first put money into the Dividend Growth Fund, I thought it would be the boring choice. Lower yield, not much excitement. But as the months went by, I watched its price steadily climb and then layered on the consistent dividends. Suddenly, it all clicked. It felt less like a quick trade and more like investing in a reliable friend who keeps improving every year. That consistency compounds into something far more powerful than chasing a high yield that fizzles out. Looking back, it's the one fund that convinced me patience isn't just a virtue in investing, it's the entire strategy. I'd happily double my allocation there. I don't mind a lower yield up front if it brings confidence in the business's strength. That combination of capital appreciation and increasing dividends makes dividend growth funds a real keeper in any long-term portfolio. The Aristocrats ETF was almost exactly what I predicted. No fireworks, just steady consistency from start to finish. Investors are drawn to companies that have raised dividends year after year. There's a sense of trust in that track record. You don't get rich overnight, but you also don't wake up to a sudden crash that wipes out months of progress. In a market with wild swings, an ETF built on predictability feels like a shield. Slow and steady proves to be powerful. The defensive sector's ETF showed me its value during a small market pullback. No drama, just slow and steady dividends. If faced with turbulence, you're glad for the stability that this ETF offers. It gives confidence, and that's worthwhile. The international ETF was probably my biggest regret. Not because international investing is bad, but the timing and currency swings made it feel like I was constantly running uphill. I'd collect decent dividends from overseas companies only to see much of the value vanish once converted back into dollars. The shine never quite lasted. Political uncertainty, shifting trade policies, and economic slowdowns made the ride bumpier than expected. It felt like having a solid player on your team sidelined when needed. Looking back, I might have leaned toward a global ETF that balances US and foreign companies. This would reduce dependency on currency moves and unpredictable events. In total, a 5 to 7% return on $10,000 isn't bad, but not all 5 ETFs pulled their weight equally. If I had funneled more into the winners and less into the underperformers, the return could have been much better. That's the eternal hindsight trap in investing. I thought ETFs would be set and forget, but I found myself checking dividend schedules, payout dates, and ex-dividend dates continuously. Dividend investing has an addictive loop. You begin to look forward to the payouts, treating it almost like a part-time job. Getting paid for holding something feels different than waiting for a stock price to rise. The satisfaction is real. I initially took dividends as cash for instant gratification. Watching those payments land was satisfying. Switching to automatic reinvestment led to real change. Even small payouts can snowball into something significant. Had I reinvested from day one, I'd have more now. A powerful lesson in how compounding works over time. Dividends aren't all created equal. Some are qualified, some aren't. The government takes a slice before you even get the chance to decide what to do with it. Watching your gross dividends shrink after taxes makes you think twice about chasing yield just for the sake of it. That experience made me appreciate growth funds a lot more, since long-term capital gains are often more tax efficient. By the end of the experiment, the lesson I walked away with was simple but powerful. Dividend investing works, but it doesn't reward impatience or shortcuts. What really paid off was balance. A mix of dividend growth funds, a core of reliable aristocrats, and defensive exposure. That combination gave me stability, a steady stream of income, and just enough growth to feel like I was moving forward. Diversification sounds good in theory, but it can feel uncomfortable and like dead weight before it helps. Currency risk, politics, and timing made it more of a headwind than a tailwind. But it's not a failure. It's about resilience over the long haul. If I were to do it all over again, I'd tweak the mix. Less emphasis on high yield and more focus on growth and consistent dividend raisers. Putting money into dividend ETFs is worth it, not for excitement, but because it's a system that works quietly in the background. It won't make you rich overnight, but thoughtfully setting it up and reinvesting can transform it into a steady wealth engine. You don't have to be glued to a stock ticker. Let your portfolio quietly do the heavy lifting while you live your life. That's my story with 10,000 spread across 5 dividend ETFs. It wasn't perfect. It wasn't always smooth. This experience taught me more than I expected. If you enjoyed this breakdown and want to see more real-world investing experiments like this, hit that like button. Drop a comment with your own dividend stories and subscribe so you don't miss the next one.